We have heard about concerns about risk management to who should or shouldn't trade them.
CFDs trading allow traders to use tools like technical analysis and economic data to make informed decisions.
Never go against the Fed. That's where you need to know more about central bank policy. So these are some of the key events that traders need to be aware of.
CFD are actually traded on margin, meaning you only need a small percentage of the total value to open up a position.
Because you are trading on leverage, any form of gains, any form of losses will also be magnified in that sense.
As beginner, when they are trading CFD, they can actually take advantage of the demo accounts that we offer. CFDs are derivatives. You don't own the stock, commodities, or currency that you are trading. Leverage amplifies both the gains and the losses. It also means that a small price movement against you can actually wipe out your capital. Stop loss is actually a risk management tool, and it can definitely limit losses, but they are not foolproof.
Definitely never trade on emotion. So that's one of the crucial things that we should take note of amid these volatile times.
Hi everyone, welcome back to another episode of Check the Charts with IG, the podcast where we explore trading strategies, market trends, and insights to help you trade smarter. I'm Brandon, Premium Client Team Leader at IG, and joining me today is my fellow market analyst, Jun Rong. In this episode, we're going to tackle some of the biggest myths around CFD trading and more importantly, how you can navigate the markets confidently in 2025.
Yes, thanks, Brandon. As you know, there's always a lot of misconceptions surrounding CFD. You may have personally heard of them from your clients. We have heard about concerns about risk management to who should or shouldn't trade them. So today we'll be breaking this down and sharing practical tips to help traders stay ahead.
Let's start with a common myth we hear all the time.
Yes, I think one of the most common myths that we hear is that CFD trading is the same as gambling. So it tends to attribute, their successes or failure to being lucky or they're unlucky in that sense. So Brandon, we know that CFD trading does involve risk. So what do you think about this myth that, CFD trading is just due to luck?
Well, I like gambling, whereby the outcomes are random. CFDs trading allow traders to use tools like technical analysis and economic data to make informed decisions. So it's hardly a 0 or 1 kind of result in the end. And then also depending on the trader's outlook on the market, whether they are actually short-term, medium-term, or long-term basis, they will adjust their trading strategy accordingly based on the market information available to them. So, which is very unlike gambling, I would say.
Yes, so I think there are several key elements that you have brought up, such as your market view. So I think knowing what's going on around the macroeconomic environment is important. For example, there's always this market saying that says one is don't go against the Fed. The second is don't go against the tape. So I think these two are sort of a market mantra that, traders will have heard of sometime in their life. So I think one is that, never go against the Fed. That's where you need to know more about central bank policy, whether the Fed is hiking rate or they are easing rates. Because generally when the Fed hike rates, there tends to be some form of a caution in the risk environment because there's sort of a tightening of a monetary liquidity in that sense. So these are some of the key events that, traders need to be aware of. So it's not just based on pure luck. And of course, don't fight the tape, don't go against the trend. That's where your technical analysis sort of will come into play. So I think it's important to really gel several elements together, not just in terms of knowledge, but also in terms of risk management. So let's move on to the next myth about CFD trading. So I think there are some clients who are putting away, who are holding off from trading CFD because they think that it is one that requires a lot of capital. So what do you think about that?
Well, CFD are actually traded on margin, meaning you only need a small percentage of the total value to open up a position. Now, in IG, we allow our client to actually start with no minimum. How much they want to deposit entirely depends on how big they wish to take on a position. So compared to traditional trading, this actually requires them to actually put in a lot less capital than trading in the traditional stock and shares.
Yes, so I think leverage is this very key benefit, I would say, for a CFD where you just need to put on a very small capital outlay, as you mentioned, and then the clients will be able to trade up to a magnified size, for example. But of course, I think one of the key note to take note here is that because you are trading on leverage, so any form of gains, any form of losses will also be magnified in that sense. But of course, like you mentioned, CFD, you can actually start out with a small capital. It allows you to magnify the trade position you can actually embark on, but ultimately it's up to your own choice, right? Yes, so you can have that small capital outlay. I believe that you have more flexibility around our position sizing, how much you want to trade and all that. But leverage is one of the benefit that CFD actually offer you. So the third myth that I've heard a lot of times, especially for those who are starting out, there's always this fear that, CFD are only for experienced traders. So what do you think about these CFD myths?
People will actually fear the unknown, especially something that they are very new to. But as beginner, when they are trading CFD, they can actually take advantage of the demo accounts that we offer and the educational resources that we have on our website to allow them to acquire more information, more knowledge when it comes to the product as well as the platform itself. So this really allowed them to learn how to use the platform as well as to know how CFD works without risking any real money initially.
Yeah, I think that's a good point. Like you brought up a demo account. So I think for all experienced traders, they will start out somewhere, right? So each experienced trader is sort of a beginner at one point in time before they, gain the experience and knowledge over time. So I think that shouldn't be one of the things that holds you back, especially for newer form of traders. But of course, for newer traders, I think the important thing is to really try to pick up as much knowledge as possible and really avoid blowing up your accounts. Yes, because I'm sure you have a lot of experience where clients, they go in and then they start blowing up their account and, they stop trading altogether. So I think the thing here is really to stay in the game, make sure that you are able to stay in the game for longer. And then from there, you try to formulate your own strategy. So every trader will have their own different strategy. But I'll say that, CFD, while there's this myth that it is for experienced traders, I think beginners can also, start to pick them up with the right knowledge, and which IG actually provides some of the market analysis, some of the educational resources to help beginner traders get started. And then you also mentioned they can start off with demo account just to test their strategy and, have a better gauge of their track record and so on and so forth. So one of the common myths that I've commonly heard is that people tend to question when they're trading CFD, do they actually own the underlying? So what do you have to say about that, Brandon?
Okay, so CFDs are derivatives. You don't own the stock, commodities, or currency that you are trading. You are on price movement, which is why you can go long or short without physical ownership. But however, your position will still be subjected to some of the corporate action of the underlying. Example, you will actually receive dividend when you long an index, and you will actually pay dividends when you short an index.
Yeah, so I think you brought up a very good point, whereby it's on where the price movement is going. So you don't actually own the underlying. And I think that really brings out one of the key benefits, I would say, for CFD, whereby you can actually go bi-directional. You don't naturally, for investors going to stocks, generally they buy and hold. But for CFD, it gives you that benefit where you can take on a short bias if you are bearish on the market. So I think that's one of the key features that works in CFD's favor as well. And moving on, I think one of the myths that I commonly heard about is in terms of leverage. So they say that leverage will always guarantee you these huge profits. Have you heard something like this from your client before?
Well, they are right, but only for the first part, right? Because leverage amplifies both the gains and the losses. So while it can actually increases the return on a small investment, it also means that a small price movement against you can actually wipe out your capital because you are actually using leverage. So without proper risk management and given the unlikelihood of the tariff war that we are now going through, there is a likelihood of a bigger price swing over this period of time. So, I guess we all have to be very cautious when we actually use leverage when it comes to CFD trading, especially in this period of time.
Yeah, so I think there's no doubt we are in this very volatile time. If you look at the markets lately, there are some huge a very huge wild swing. Largely, really, markets are having this short-term view around what Trump is going to do. I think he's kind of quite unpredictable. No one really knows what he is thinking. So in a way, markets are having this more reactive kind of approach to whatever headlines that is coming in. So in this case, leverage have to be taken very carefully. As you mentioned, it can amplify your losses, but on the other hand, it can also sort of amplify your gains as well. So it works both ways. So traders will definitely have to take note of that. And moving on, I want to talk about, since we are talking about this huge swing in the market, I think it's very crucial that we talk about stop loss order. So there's this myth that I've heard whereby they say that stop loss orders will eliminate all risk. Do you think it's true?
Well, stop loss is actually a risk management tool, and it can definitely limit losses, but they are not foolproof. So in fast-moving market, gapping can occur where prices jump past your stop loss level, resulting in larger than expected losses. Over at IG, we do offer another type of loss, another type of stop loss, which we call it the guaranteed stop loss order. And this will actually counter gapping and slippages. So your order will be filled exactly at the price level that you set.
Yeah, so I think this guaranteed stop order is one of the key features that IG actually provides, where it helps to avoid some of the issues around gapping, where you could potentially have your orders not being filled. But with these guaranteed stop orders, it offers you the reassurances that the price that you set, it will be filled if even if a gapping occurs. And I believe risk management is particularly important in terms of trading. Not just being right about the direction, but of course also how you actually manage your risk and amplify your gains, so that overall your net gain should be more than whatever you have lost. Because there's no 100% in terms of CFD trading. So ultimately, it's all about mitigating or minimizing the losses and then amplifying the gains in that sense. Yeah, so therefore, I think risk management is definitely one of the crucial elements that traders should take note of. I think all in all, we need to understand that in reality, CFD is a tool, and like any tool, it really depends on how you make use of it to your own benefit. And I believe that with proper education, strategy, and risk management, any traders can actually trade a CFD without exposing themselves to unnecessary risk.
And that's why understanding risk is so important, which leads us to our next segment. Before we wrap up, a quick reminder, past performance is not a reliable indicator of future results. Trading involves risk, so always stay informed and make sure you are trading within your means.
Yeah, so at this point in time, I think it's important to touch on some of the important elements that traders should have in terms of the mindset moving forward. I think there's no doubt to highlight, the importance of continuous learning and strategy and development. I think trading is more like a marathon. It's not like a very short sprint. The important thing here is really to stay in the game and to avoid, getting blown out with your multiple trading account. Because as long as you're in the game, each mistake, I believe, they'll offer you some of a lesson that you can pick up on. And I think therefore it's really important to somewhat keep a trading journal, to take down some of the trades that went wrong, and of course also the trades that paid out well for you, so you will be able to learn from there over the longer term. We have to emphasize the importance of staying disciplined and definitely not trading on emotion. So I know recently these Trump's tariff headlines have created a lot of fears in the market. We are seeing several fear sentiment indicators, hitting extreme levels. And there's definitely a lot of emotion trading going on in place. So I think it's important that you stick to a particular strategy and not try to always shift the goalposts in that sense around your trading plan. And definitely never trade on emotion. So that's one of the crucial things that we should take note of amid these volatile times. And also we got to emphasize on risk management. I believe that apart from just being right in your market direction, I think risk management plays a very crucial role. So you can actually have a win rate of maybe 50%, but if you are able to manage your risk well and amplify your gains such that, the overall gains is able to offset the losses, it's still a very sustainable trading map for you. So I think risk management is also something we got to take note of.
At IG, we've designed a platform that puts you in control. Fast, intuitive, and tailored to your trading needs. Whether it's Forex, indices, or commodities, you'll find everything you need to make informed decisions and seize opportunities. Opening an account is quick and easy. Ready to start trading smarter? Visit IG.com today and experience trading with a trusted world leader.
And last but not least, I think IG does provide some of the educational resources and features. Maybe Brandon, you want to bring us through some of the features that you think can benefit the client?
Yep, definitely. So on the IG platform, client will actually be able to find this particular function called the trade analytics. Within the trade analytics, client will be able to see some of the different stats and ratio whereby the platform analyze their trade results, looking into their win-loss ratio, their duration of the trade, and also their P&L analysis. From there, they can then further examine on those trades that they have done in the past, which are the better ones, which are not so good ones, analyze and make improvement and adjustment, and hopefully get it better the next time.
And I think that's important, right? So it kind of touched on the key importance of having a trading plan. And I think having that IG trade analytics, it really just helps to summarize all of your trades. What's your win percentage, which are the, how much are you actually getting in terms of a profit per trade, losses per trade. And from there, you can actually have a better understanding of your own trading style.
That's right.
And of course, here at IG, we want to support traders in every way possible. So Brandon, are you able to share with us some of the tools or education materials that we offer to our clients?
Sure. For IG, we also offer webinar, trading guide, as well as in-depth report for client to actually reference to, especially for beginner traders. Those trading guides will be very, very useful to allow them to have a better understanding on the different features of our trading platform and actually find out how to use certain function within the platform, both on the web as well as the mobile app.
And just now we touched on the risk management. So what are some of the risk management tools that you recommend to your clients who are trading with IG?
Well, I would say the number one tool I would always ask clients to be familiar with or to actually learn on the IG platform is the guarantee stop, how it works, what it do, what are the things that it can provide. So that is actually a very powerful tool and definitely something that they will need to know. Even they don't use it, they have to know because there will be time that they will probably need to use it.
Yes, so for sure. So whether you're a new trader or a seasoned one, I think IG provides everything you need to make informed decisions, all the way from market analysis to platform tools and to educational content.
To sum up today's episode, we have debunked common myth about safety trading, we have discussed essential risk management strategies, and we have shared how you can stay ahead by capitalizing on emerging market trends responsibly. If you are serious about trading CFD, remember, discipline, strategy, and continuous learning are key. Don't forget to subscribe to check the charts with IG and check out our trading resources at ig.com/sg. Thank you for tuning in, and we'll see you in the next episode.